Now, some critics say the boom in artificial intelligence is being fueled by circular deals. What do I mean by circular deals? So let's take these two companies. Let's start with OpenAI. And although it's not gambling per se, these sort of make a certain amount of sense. OpenAI decides to invest. It's got a lot of money, and it invests, say, billions of dollars in chips. Not these sort, but you get the idea. OpenAI invests billions of dollars in AMD chips. AMD, of course, is already worth quite a lot, and it gives, in return, OpenAI a 10% stake in the company. There you have it. That's how we stand. But investors see the beauty of this deal and they like it. And so investors absolutely plow in and ramp up the value, in a sense, of AMD. Why? Because they like what's happening with OpenAI. But remember, OpenAI has 10%. So what is the effect of that? You don't need me to be too obvious. The effect of that is that OpenAI's 10% stake suddenly becomes that much more valuable. And all of this just because it put this little bit in to start with. Now, transactions like this, where you see huge amounts of wealth generation, the circular AI economy, is why my next guest says the United States has become one big bet on AI. Ruchir Sharma is the chair of Rockefeller International. He's there. You can see him now. I see the logic. I read the article, and it's certainly true that whatever economic, whether it's employment, it's inflation, it's trade, there's a reason why the US is doing better, and it's because of a faith in AI. What I think we need to understand is it well placed, or is it ill-founded?
Well, Richard, I think that any economy which stands on just one leg makes for a very fragile foundation. And I think that's the point that I was trying to make out here. At one level, it's quite impressive as to how the US economy has been so resilient in the face of so many headwinds. Those headwinds have included tariff, a massive drop off in immigration, the so-called attack on the Fed's independence, institutional backsliding. And in the face of all of that, the US economy is still growing at a pace of possibly above 2% this year. That's pretty impressive. But the problem is that a lot of that growth now is coming on the back of just AI. And that's happening at two levels. One is just the amount of spending which a lot of the large companies in America are doing, which runs into hundreds of billions of dollars. And the second is the wealth effect that I think has been not studied well enough, which is that if you look at America today, the 80% of the gains of the stock market this year can be explained by the AI plays. And those stock market gains are fueling spending by the rich.
Let me jump in, because that latter part, the wealth effect, has been, in a sense, we've seen that before with dot-com boom and bust. People felt wealthier because the shares went up. We've seen it in real estate. So I get that bit. But AI is providing economic benefits on productivity, lower cost of production, and indeed lower employment. Is it your fear that those benefits and gains, economic gains, are not going to manifest themselves in time to justify the valuations in economic reality?
No, absolutely. So, but my point is that it better pay off, because all the other things are stacking up against the US economy at this point in time. Whether it's got to do with the very overvalued market, but as I said, that the negative impact on tariffs or the drop off on immigration, these are serious headwinds. At the beginning of this year, had you been told that the average tariff rate in America is going to be 16 to 17%, I think that most people would have said that that's going to lead to an economic recession, and we haven't had that. But it's not because tariffs have not had a negative effect, but it's been more than offset by what's happening on AI. And it's not just the present, even the future. the market is pricing in a very big boost to productivity compared to what we have already seen in the last few years.
Right, but you're not an AI naysayer. So what is your fear concerning AI? Is it simply, to overquote Greenspan, over exuberance to a point of ridiculous levels? Because if that's the case, then yes, there'll be a very nasty crash, but AI will still come along in the next 5, 10, 15, 20 years.
No, so I think that as far as AI is concerned, its transformative effect is, I think, that well appreciated. But I think the point that I'm trying to make here is that the US economy today and the US stock market are being driven solely by AI. And outside of AI, the economy is not doing that well. And it shows up even as far as consumer spending is concerned, that the wealth effect is driving the spending among the top 10% or so. But outside of that, consumer spending has been rather anemic over the past year or so. So I think it's being cognizant of the risk that it's all dependent on AI. Outside of AI, the economy is virtually at stall speed.
So let's assume, well, you're a man of your great abilities and respect. Let's take you, we agree. So what do you do about it? If your portfolio is understuck with AI in some shape or form, NVIDIA, Oracle, doesn't matter. You are so stuffed. And as you're well aware, you start looking at 401ks and they've got more of it, and you start looking at ETFs, and every ETF you have somewhere down the line has got even, and you suddenly realize that most of one's wealth, 60-70% of it in some shape or form, is tech AI related. What do you do?
Yeah, so I think the main strategy here, Richard, I think it's already been playing out this year, is that if you want to buy into America, you have to be clear that you're buying AI. But outside of AI plays, the rest of the world looks much more attractive. So in fact, this year, the other statistic is that the international equity markets, which are much less exposed to AI, those have been outperforming America's market by the widest margin in over 15 years this year. So I think that whether it's even banks in Europe, or it's got to do with some emerging markets where political risk seems to be improving, we are seeing gains take place outside of that. So the portfolio approach here is what I call a barbell portfolio, which is, on one hand, if you want to own AI and you want to own America, that's one side of it. But to own everything else in the world, to diversify outside of both America and the fact that America is overly exposed to AI. And one of the very surprising statistics that I even mentioned in my latest FT column is that for this decade, not just this year, for this decade, the average European stock has in fact been outperforming the average American stock outside of the Magnificent Seven. I think that that is a pretty startling statistic, that despite all this hype about AI and what's happening there, if you just take out the AI plays and the 7 magnificent stocks, as they call them in the US, the average European stock has quietly been outperforming.
What do you call it? The bar? What did you say you called it?
The barbell portfolio approach.
Oh, the barbell.
On
yes,
one hand,
yes. No, I get it. Sorry,
yes.
sorry. I thought you said the barber. I was wondering where the short back and sides was coming from. Thank you, sir. I'm grateful to you. That's the sort of advice and guidance we need on Quest Means Business.